Hello traders and welcome to another video review. Today is Wednesday, September 21st, 2022. Let's find out what is going on the Forex calendar. The main event of today and the event that everyone is waiting for is of course the FOMC interest rate decision, FOMC interest rate statement and the FOMC Press Conference. It all starts at the 8 p.m. and the press conference is 30 minutes later. The market participants expect Fed to hike the interest rate from 2.50 to 3.25. However, there is a rumor that maybe even 100 basic points the hike will be. So that would be in our terms 3.50%. Other data important for today are from the US as well. Existing home sales scheduled for release at 4 o'clock and crude oil inventories scheduled for release at 4:30. So this is the event very important for the market participants because it will either extend the further US dollar appreciation across the board, or it will just slash the recent uptrend a little bit, not to the end, but a little bit at least. Okay, so let's find out what is going on the charts ahead of the FOMC interest rate decision. This is for our chart of the US dollar index, and what do we see here is a very interesting price behavior ahead of the FOMC. We got this big rally after the worse than expected CPI data from the US had been published. Then we have a period of the consolidation as the market participants await the FOMC Fed interest rate decision and FOMC statement, and just hours before the announcement, the US dollar is rising again across the board. We just made a marginal higher high, swing high, 110.84. This recent high was 110.76. So it's just like a 8 pips higher. However, the situation is very clear. The bulls are in charge of this market in the short term, in the near term, in the mid term, and in the long term, because this is for our chart. We just broke above the technical resistance. Now the level of 110 will act as a support, 110.25, 109.46 will act as a support, and 109.27 will act as a technical support. So the market is ready for another move to the upside. Let's just find out what's going on a daily time frame chart. As you can see, we bounced from the 30 days moving average. We are now ready to rally higher on a daily time frame chart. There is still a room on the RSI to move. So if we just zoom in, we can clearly see that yesterday's green candle invalidated the 2 pin bars here. We have another higher high, and it looks like the market wants the US dollar to go even higher. The target level is not that much clear, because of course what do we have here is uncharted territory. So we need to wait for the market participants to make this relevant swing high. This is the recent price action. There you go. This is a valid breakout on a daily. As you can see, it was valid here, it was valid here. So we should expect another higher high if the Fed delivers. If the hike will be bigger than 0.75 basic points, so 75 basic points and 0.75%, then of course the US dollar will rally even higher and faster and more aggressive. What then will happen with the euro dollar? Well, On the daily time frame chart, as I said many times before, the euro dollar is in the downtrend. We are way below the parity level right now, and as you can see, we are approaching the lows from the beginning of the September, located at 9,867. So daily time frame chart, we are still in a downtrend. We don't actually need this line to be here anymore, so we can remove it. The supply zone has been violated, but there is no close above the supply zone, so it's a perfect supply zone for the market participants. Since then, the market is going lower. We are just around 9,885, 9,867, around 18 pips from the month's low and the last low, the last swing low, the last downtrend low on the US dollar to the on the euro dollar. So if the US dollar index is going up, the euro dollar is going, of course, down, is going lower towards the another lows as the downtrend on this market continues. What will happen with gold? Let's find out then what is gold doing. As you can see, the gold is back below trend line. This is like a mid-term trend line. Is back below very important technical support, 1,686, 1,676. So now these two levels will act as a technical resistance for the price. We might change these lines, of course, for another color. The color will be now red because it's a resistance. And there you go. So those levels are now resistance. Where is the next target for bears? Let's find out. Very important technical support, tested many times. If the Fed hikes, then the price of gold might drop even higher, even lower. Sorry, even lower. Where is the next target? Well, it looks like there isn't like there isn't meaningful technical support unless the lows of 2020 is hit. This is 1,451. So that's for sure very important technical support. We can put it here and make it like a very thick and very green so everyone can see. However, one more support might be seen here around the level of 1,640, but this is, this is a minor support. The other minor support is located somewhere here around 1,569. So anyway, the market reaction for the interest rate hike might be already partially in prices already, right? So the market might be already done with the down move for a while. However, any breakout below the lows of the Monday, which is located at 1,653, is of course bearish. And there is right now there is a bullish divergence between these two lows. So as I said, maybe the market reaction on gold might be a little bit different, and we might bounce or retrace a little because of the negative divergence. So that's the gold. What is S&P 500 doing right now? Let's find out. Daily time frame chart of the S&P 500, and this situation is very clear right now. If Fed hikes the way they want to hike or more, we will see massive sell-off. We might hit 3,726 points today, or even the lows from the 16th of the June, located at 3,634. So that's the situation on the S&P 500. Typically bearish scenario is being opted. And what is doing the Bitcoin? As you can see, very interesting situation on the Bitcoin, just because we got this big pin bar, and that means bulls are defending the technical support, the last resort, just below the 19,000, between 18,245 to 18,640. However, no confirmation to the upside had been done. this is down candle, red candle. This might be even stronger red candle. So if there is a breakout below this very nice pin bar low, located at 18,239, then of course we still have a room to move even lower towards this year's low, $17,600 for the price of the Bitcoin. This is the low made in the middle of the June 2022. So please keep an eye on the Bitcoin, because it's getting the bulls are getting very frustrated, and they might throw the towel, give up, and then sell-off might happen, whether you like it or not. That's because the hike of the Fed will of course make the US dollar more valuable currency, more desirable currency, not necessarily Bitcoin. And Bitcoin is of course right now attached to the US dollar or the Tether. So if one goes down, or if the rate is hiked, then of course this situation is very uncomfortable for the hodlers, for the Bitcoin bulls, and they will just give up. Basically, they might just give up and throw a towel. So the bears might smash the market lower like no tomorrow. I think that's everything from me for today. Just hours ahead the Fed interest rate decision and FOMC press conference. Please stay vigilant, stay focused during this data announcement. Let the dust settle at 8 o'clock, 8:30. Please listen carefully the answers of the Fed Chairman Jerome Powell for the next possible moves of the Feds regarding the inflation and regarding the interest rates, regarding the monetary and fiscal policy. All right, so we will definitely have some movement today, tonight even, on the market. So it might be a very, very dynamic situation, roughly just before the 8 p.m. and during the press conference of the Fed's press conference. So stay alert, stay focused, and happy trading for all of you. That's everything from me for today. I hope I see you guys tomorrow. So take care and bye bye.